crude oil. Right now, it's at 98.67, and I'm going to just pull up Brent on my computer at 105.08. That's where it is. The high today on Brent has been around 105, so we'll continue to watch that. And in the meantime, the 10-year bond yield 4.43, getting closer to 4.5, isn't it? U.S. dollar 99.99, and Bitcoin pulls back 4%, 65,000 and change. So as the markets have to digest all the geopolitical uncertainty, the sticky inflation that we could be seeing because of energy, just raises new questions about your portfolio. And Russell Hackman, president of Hackman Wealth Partners and author of Wall Street is Not Your Friend, is back with us here on set. It's great to see you again. Thank you for being here.
Great to see you, Nicole.
Well, it's a tricky time, isn't it? In fact, we were saying how this sell-off down 5 weeks in a row is the longest sell-off we've seen since 2022. Some of your thoughts?
Well, you got to cope with, as you're saying, hey, this is now, we're near the end of the first quarter, and it's going to be down. The major indices down 5, 6, 7, 8%, right? And I think that hopes of a rapid end to the war are diminishing. You're seeing that regardless of what DC is saying, oil's spiking and markets down, vol is spiking, right? So, pretty concerning that we may be in for a more protracted war. And even if you were to have peace, I think there's, the energy prices are not dropping, in an instant, far from it. So there's, the other thing I think you were alluding to is, the possibility of even Fed hikes is on the table.
I mean, I don't know about that. Do you think that's a possibility?
Well, the futures markets are saying there's a 40% chance of a hike or so.
Why would they hike? And when would that be?
Inflation, right? I mean, you're looking at even before the war started, you were getting inflation numbers, PCE, CPI, et cetera. You were getting inflation numbers that were around 3%. That's still definitely higher than we want it to be. And now you have basically an energy shock that impacts the price of oil and gas, et cetera, impacts the price of almost everything else, right? So that's why they're talking about it.
Yeah, I mean, the likelihood, the probability of a Fed rate hike by year end is now up to 52% on the CME Fed Watch tool. Yeah, this, as we talk about inflation, the Dow also is in correction territory. I hadn't really thought a lot about a hike, but it's interesting. I mean, if they're going to be so worried about inflation, it's going to be very hard, though, because it's energy inflation. It's not quite inflation on food or inflation. I mean, does maybe the higher energy costs get passed on to the customer and then it, sort of snowballs like that?
Yeah.
In the meantime here, what do you tell folks about investing at this point? I mean, you have people that are retirees. They probably have a plan, a diversified portfolio. But what do you tell them now?
Well, there's sort of the long term, and then there's sort of the short to intermediate term. I think in the short to intermediate term, we've gone from sort of wind at our back with, the Fed having been forecasted to cut rates this year, which is almost always a good thing for the markets, to, prices up. To your point about, hey, why would the Fed raise rates, or why would inflation be staying high, even regardless of energy? The government deficits are still very high, and that in and of itself is inflationary. That's printing money, right?
I mean, it's pretty incredible. I mean, I'm not making any predictions. You had, one firm say, I think it was Goldman Sachs, saying 2 to 3 cuts this year, and JP Morgan was saying none.
Right.
So the concern here is that you have energy inflation, which then brings down GDP,
right,
which then slows the economy. Then you have no job creation. We're already at very slim job creation anyway. We're getting that jobs report next Friday. Even though we were talking about it upstairs with our team, it's Good Friday. We're closed here on Wall Street, but the Bureau of Labor Statistics will release that number. But that's what happens. That's the ABCD, right? High energy, higher inflation, GDP down, job creation down. So then you need, then you would need a cut. Maybe they should cut now.
Well, and certainly what the Fed doesn't want to see is the possibility of inflation jumping substantially above 3%.
Right.
And you can't say it can't happen because it happened in,
And we saw
2022, right?
The OECD yesterday had warning of inflation above 4%.
Yeah.
So that was important too. So is there certain areas that you invest in that you think are sort of inflation hedges or good for the long term for whatever reason? What do you advise to folks?
One thing that's just been interesting this year, and I'm sure you've been commenting on it here, has been the transition in leadership of the market from the Magnificent Seven stocks, those stocks now underperforming, right? Mm-hmm. And so therefore, and if you start looking at the sort of more traditional dividend-paying stocks, those can be places to hide out, areas where there's some principal protection. We like that for folks. I mean, going into this year, everyone was sitting on 70% S&P gains from the last 3 years. I mean, I think for a lot of folks, steps are potentially in order to reduce risk, especially if they're retirees and have anything more than 50% of their money in the stock market.
I want to bring some breaking news here to you. I was waiting on the House leaders to move along with the TSA approval.
Right.
Well, they didn't. The House GOP leaders reject the bill. This is breaking news. This is just coming across here. I hadn't heard this yet. Have you heard this yet? They reject the bill, right? Yeah. They are not. They are likely to extend this standoff. They want immigration to be part of this immigration funding. Yeah. The Senate had passed that yesterday evening, right? And so, or they had agreed it was fine, and so now it was going to the House. And they didn't even have a roll call, but they had agreed for the pay for the TSA, and they put the immigration enforcement aside. But now the president has put an executive order to get the TSA workers funded. Yeah. So I guess that will move forward.
Well, certainly. I mean, listen, I'm at an airport almost every week, mm-hmm. and it's definitely been getting messier. That's not a great thing that they can't sort that out, and any kind of pressure as it pertains to air travel gets everyone concerned, right?
Right, and one representative, and just sort of wrapping this part of it, saying from Texas, Representative Chip Roy, the Republican from Texas, absolutely offensive to the people that they're sending this bill over and it doesn't fund Border Patrol and the core components of ICE. So that's where the disconnect is, and so that's where you still have a standoff. Pretty incredible. I mean, what do you think about some of those stocks that have to do with travel or the consumer? And we've got the consumer Michigan sentiment, and that declined a little bit.
Yeah, and I think the airfares are going up already, right? And the price of obviously jet fuel is way up. That's going to impact the cost of travel. That will impact the summer travel season. That will, as you talk about all these connections, one thing after another, that's not super for the economy either, right? Even if you look at, and it's already coming through not just in the price of filling up your gas tank, but home energy as well. Prices are going up substantially for many, many Americans.
What have been some of your favorite plays over the years? And could they still work? Is it a name? Is it a strategy? Is it an index?
They taught me, back when I had a lot of hair, that at the University of Chicago, that you really can't be the market. So I've generally been kind of an index guy, right? Mm-hmm. I mean, we like to diversify. We like diversified holdings. Single name investing is very, very tough. But right now, if you had to pick some, you're picking some of the more defensive names, some of the names where if the economy does have a downturn, they're going to be hanging in there.
Defensive names.
Yeah.
Yeah. All right. Well, Russell Hackman, President, Hackman Wealth Partners, author of Wall Street is Not Your Friend, here with us today. Thank you so much. And I'm glad you were able to go through this news, extending the standoff.